Good morning, starshine.
Welcome to the real world. Whoa! Mortgage your house and buy Bitcoin with breathe air. There's no second best, okay?
Breathe air. GM. Okay. So, trade of the day is going to be BTC, of course. Looking into the election. So, let's zoom this in. All right. Where have we got our levels here? We have our important higher time frame levels. We have weekly market structure below. We have, let me zoom in on this. Which of this stuff do I need? Do I need any of that? No. Get rid of that. No. I want to keep that daily order block. That's important. That resistance level is still important. These sweeps are not important. Get rid of all that. Get rid of all this. Get rid of this. So that previous breakdown level, which was set on, I think it was Friday, we lost that level and we're trying to flip it. So we're trying to flip it right now. All of this is happening within the daily order block. So I mentioned a while back, when Bitcoin is pulling back, it's pulling back into daily demand. The daily market structure level on a close basis is 66.6. We have held above that. We had a nice long wick into it. You basically don't want to see Bitcoin go much lower than there. So retests around this area are fine, but you expect it and want it to hold there so it can build itself up to have a breakout later on in November, or at least attempt the highs again. And so then when you zoom it in, you're looking at your 4 hour, and let's look for some signs of reversal. We have our first sign of reversal very, very early, but at the red line, this is also where there was a 4 hour interim high. So this was the last high before the lowest low. Just the immediate high that preceded the lowest low was this one here. Slightly above it, you have the swing high, which was the highest point before the drop. So really, for a proper structure break, you want to see Bitcoin push beyond here. 4 hour close anywhere up here. Then you've actually shifted structure. And so you'd be expecting that any pullback would produce a higher low to complete an under over, right? Your inverse head and shoulder. So if Bitcoin can push on, probably with a Trump win, up towards 70 and have some closes up there and then start to pull back, that's really a buy the dip area anywhere down into this low that we've just seen. And for that, what you want to be looking at is where are the inefficiencies. There's no inefficiencies here on the 1 hour, which is really nice. So it moved up with this nice impulse, consolidate, dipped down, retested it, so there's no gaps left behind. And then we have this 1 hour order block over here, and you have some liquidity below that. So depending on where Bitcoin goes, but if Bitcoin goes up first, I think this is a very nice area to come back to later. Now, if it pulls back from here into it, I would be less hopeful of that holding because it's essentially rejected at resistance again. What you want to see is for Bitcoin to be able to clear above resistance. If Bitcoin can clear above resistance and take out some of these weak highs where there would be liquidity resting, and then pull back into this area, and of course it can go higher too, anywhere at all. You're waiting for it to come back here to hit this untested demand along with the stops resting below that and holding above 66.8. That would be a great area to see it come back into. If we go back to the 4 hour and we put on the EMAs, you also have a pullback into the 4 hour 200 EMA. Now, I mentioned last night that when you see markets pull back in a trend to the 100, making you high and then go to the 200, it's not a sign of continuation. As the tendency is actually in a trend, when the market pulls back to the 100, gets trend support, makes a new high, then pulls back to the 200, makes a higher low, right? Because it went much higher, it comes back and makes a higher low. That's important. So it is still in an uptrend by that basis. However, when it has held at 100 and comes back and then doesn't hold the 100 the second time, that is no longer respecting the 100. It has to dig deeper to get liquidity. That can often be a sign of trend weakness. Now, it does rally from that, and it usually rallies quite hard and moves either to the 50 and rejects and goes down, or makes its way towards the highs again. But I've studied this, and I'll look at it here. I'll show you the study. I'll just show you a little bit of it. I won't show the entire thing because there's 100 plus instances. But from my testing across many different time frames, mostly the 1 hour, the 4 hour, but it doesn't matter because the trend itself, the trend bands themselves are universal in terms of in a trend that respects the 100. This is the question. In a trend that respects its 100 EMA to make a new high, and then has to go to the 200 EMA with a higher low, how often does it then continue to new highs? So the answer is 38.5%. So from my study, and you should do your own, by the way, because don't just believe what I say, and do the fucking work. 38.5%, meaning there's about a 40% probability that the market will do what you see on the screen, which is bullish continuation. Okay? So there's some bullish ones. The way I measure it is I just show this, and I show the distance between the two, so 160 candles. The distance between the first test and then the second test. So the test of the 100 that holds, and then the test of the 200 that holds. This is quite common as well, where when it hits the 200, it does rally and moves all the way up. And even if it's bullish, it comes back to the 200, but at a higher low. So if you're looking at Bitcoin right now, that's something to keep an eye on, because if we move higher, and I get a clean chart, which will definitely not be clean. Yep. If we get a clean chart, and let's say Bitcoin goes up here and back down, up and down and up, that might be something like what you see where the 200 comes along and it retests it again at a higher low. That would be very good. That would be bullish. A little bit like this, touch the 100, comes up, touch the 100 again, and then goes. It's just a standard retest. Instead of going all the way back to the exact level, it will go to wherever the 200 is, if it's following trend structure. So that's how that looks. You see it as well here. Another example, holds the 100 and it moves up. And by the way, I have these bands as green just because when you're back testing, it's easier to see when it's in an uptrend if they're in green. So I have it green when it's in an uptrend, red when it's in a downtrend. Just makes it easier for visualizing to back test. Holds the 100, moves up, eventually comes back and touches the 200. Well, front runs the 200, which for the purpose of my study is fine as long as it's within a certain deviation. That's not important right now. Important thing is, holds the 100, moves up, comes back, high or low at the 200, does equal continuation. And continuation just means, does it make a new high? It doesn't tell you how far beyond it goes. It just means, will this make a new high and stay there? Will it break out and hold like it does here? And this is an example of how to do the deviation. So I draw from the highest swing point to the lowest point, and it has to be within 5% to be classed as a valid front run, right? If it's front running, 10% away, that's not a touch. If it's a 5% or less, for me, that can be considered a valid retest of the 200 because, of course, sometimes orders will come in and they will cluster and they will front run it. That doesn't matter for us because in this current example, we did actually touch it. So it's just for the purpose of that testing. Another one here hits the 100, which again, deviations just below it are fine as long as it doesn't go beyond 50% towards the 200. It's fine for it to flush below and trap people. That's still a valid hold of the 100 area. Comes up all the way back, does a higher low into the 200. It rallies up to the 50. So very common, the thing I would take away from this is that if it's going to come back for a retest or it's going to be bearish, it will go from the 200 to the 50, reject the 50, and if it doesn't hold the 200 again, then it's bearish. But I'll show you some bearish examples here. Some bearish examples here. Holds the 100 with a deep wick. So again, even weakness within it holding the 100, but it does hold. All the way up, back to the 200, doesn't hold it on the first touch, right? So it breaks down through it and reclaims it. Again, you're seeing weakness in the ability for it to hold, but it does make a higher low. That leads to a sweep of the highs and then reversal. Holds the 100 over here, moves up, new highs, pulls back, holds the 200 briefly, then loses it. And then down we go. Holds the 100 here, makes a new high, comes back, holds the 200 with a higher low, bounces to the 50, then fails. So that's an example of what you want to watch. Now this chart actually ends up going higher, but the point is, if you were buying at the 200, it went into the 50, it failed, and then it went significantly lower. It flushed all the way down, lower, 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 made a lower low, and then reclaimed. So that's still considered a fail, because if you're trading that, your 200 buys would be stopped out. And this one holds the 100, so a deep wick below and close above, false breakout, that counts as a hold in this purpose of my testing. Moves to new highs, drops back into the 200. The first touch of 200 is with a higher low. You can see here with the wick, and here, higher low. Then it sweeps lower, then it hits the 50, then it fails. So these are obviously quite clear bearish structures, or at least clear in the context of what we've seen. So what does that all mean? The reaction off the 200 has been really good. Best reaction you could really hope for. So I don't see any of those immediate bearish paths. I see Bitcoin as more likely to go higher. And I think what matters next is, when does it next test the 200? If at all, but I suspect it will, or it'll make a higher low around the 200. What you want to see from Bitcoin here is that it spends the next few weeks building through this range. I really don't think that it going like this is a good thing. I think if it rips straight to the highs, that leaves a lot of inefficiency and leaves chance for a proper top to form. So I think best thing would be for it to rally up into here somewhere, pull back, and then start to stair step its way higher. Because then what you see, if you see Bitcoin over here a few weeks from now, what you're actually seeing then is a rising trend with support for forming underneath and higher lows forming that will set up a nice base for a breakout. It'll probably be choppy in the lower time frames, but it will overall be good. And that's it, GM. I'll be on all day, trading, updating you, and then we will check out the action results later. GM.